Hello everybody, this is Brandon with Crypto Trades and Tech, the weekly crypto update video. The news of the day so far is the big breakout we've had. Now I was looking for a potential trap. I'll discuss later whether I think that this is still a trap or if we've broken out of that pattern, but we'll get to that in a minute. But to get started, I'm not a licensed financial advisor. Anything that you hear here is just my opinion. Please don't go and take trades or buy any crypto based on anything that you hear here without doing your own research. If you do, you're going to be losing all your money and living in a van down by the river. Now, the first bit of good news that might be behind this pump today, Federal Chairman Jerome Powell of the United States has no intentions of banning cryptocurrencies, including Bitcoin. However, shortly thereafter this morning, it was reported that the Biden administration seeks to regulate stablecoin issuers as banks, though. I don't know that this is going to have too terribly much impact on its own. Let's see if there's any other news to follow. In other news, a project we've been tracking, the Umbrella Network, which is an Oracle service, has launched on Ethereum with a cross-chain bridge to the Binance Smart Chain. You can see here they're planning future cross-chain integrations with these major projects, Polygon, Solana, Cardano, and Avalanche. We'll take a look at Umbrella's chart here in a minute. More delays for potential Bitcoin ETFs. It's pretty much inevitable at this point. It's just a matter of when, not if, obviously. But you can see here several ETFs were rescheduled through late November to late December. Another topic I've seen discussed a lot recently is how much mining is there left in China, and what impact would it be if China, through the internet firewalls that they have, completely blocked off all Bitcoin mining out of China, since most of the largest pools are run out of China. And a lot of people point to these maps right here, but what I want to highlight to you, this is the Cambridge Bitcoin map. And you'll notice this map is from March 2021. So this is before the crackdown, which shows that the majority of crypto mining, 46% back then, was in China. Now that has almost entirely moved out of China. Another popular one here is the Chain Bulletin, and their data is taken from the Bitcoin Electricity Consumption Index that we just looked at. But you'll see here that these pools are updated as of April 2021. Now, while these pools may be technically located in China, keep in mind that many of the services that they run are on servers outside of China potentially. And so when you connect a miner to a pool, you may or may not be communicating with servers actually in China. And the way the pool operates, the pool operators share their hash power, and then those coins that are mined are distributed to multiple wallets that belong to miners all over the world. So while the pool is technically associated with China, the servers that operate the core of the pool can be run on cloud services all over the world. And in fact, in many parts of the world, when you connect to one of these pools, you're actually connecting to a local regional server and not back to China itself. So there would be some disruption to the hash rate and to these pools probably, but it would not take much to reconfigure and move the services out of China to where the miners who are outside of China would simply connect to servers that are not in mainland China. Now, I've done as much digging as I can to try to figure out how much hash power is actually left in China with miners online in China. Now, this is incredibly difficult to actually ascertain because there's obviously a lot of the use of VPNs, which obfuscate where these things are coming from. And China probably actually has the best intel on this because they can tell by the power usage if there's potential Bitcoin mining actually probably going on. But really, if you look at the Bitcoin nodes, the list of reachable nodes that are associated with China, there's very, very few that are still left and show up in China. The vast majority of Bitcoin nodes are outside of China. And it appears to me, you see here in this total hash rate, when the crackdown was first announced in May, you can see the plummet in the hash rate here from 180 terahash all the way down to 87, nearly cut in half. This was most of the actual Bitcoin miners shutting down their operations. Now, a few remained in operation, and this was a large relocation of operations largely here. It appears to me that what's actually left in China is probably well under 20% of actual hash rate is actually being hashed by miners in China anymore. The vast majority of it is associated with these pools that are technically associated with China because that's where they're started, but they likely have services and servers outside of China. So if they were to get completely locked down, they would they could continue to operate as a pool outside of China and services running in cloud services all over the world. Now, the miners themselves cannot operate in that model, but the pool organizing the miners can. And also keep in mind that just because they shut down mining doesn't mean that the Bitcoin is lost, right? So when a miner mines a block that's rewarded to a wallet address, that wallet address continues to live on the public global ledger indefinitely. So the reality is that if a Bitcoin mining operation gets shut down in China, as long as the wallets themselves, the seed phrases on the wallets are not confiscated, and or the officials don't force the miners to somehow transfer their coins from their wallet to another wallet, then those funds continue to exist, and those miners can simply get access to their coins when they leave the country. So the main point of it is the vast majority of Bitcoin mining is likely moved out of China. It's becoming less and less of an issue every day. The ultimate question is if Chinese miners who have a large amount of Bitcoin decide, because they've had to fold their operations, that they're going to dump their coins onto the market. We may have a few more situations of volatility because of them feeling like they're forced to sell their Bitcoin and move on. But this is something nobody can predict. All right, so take a quick look at the charts here. Now we can see this Bitcoin breakout that I've got measured right into resistance, and I want to highlight this for you. This other false breakout was right into some similar historical resistance. If I go over here, and you'll see I had this daily Heath level right here, 40,000. That's exactly where it hit. It consolidated right there and then turned around. Now this pattern here that we've had is a much smaller pattern, and this is a much larger breakout as a percentage to the moves prior. So this is probably a breakout, a permanent breakout in the other direction. I don't expect the same continuation downward pattern. I'm no longer expecting us to hit this low point, this bottom trend line by mid to late October, although it's still technically possible. I'm just no longer expecting it because this did break above the $45,000 level. And assuming we close there today, which it looks like we're going to, then we'll have to watch closely over the weekend to see what sort of price action we get over the weekend. So we were fortunate enough to get several Wyckoff experts to weigh in on this chart that I had come up with. We were trying to decipher if we had a distribution event, then an accumulation event through summer, and then if the July through September price action was really another distribution event with another accumulation event here through October. And there was some debate on that. The Wyckoff experts, I don't think totally agreed. Some said that this was simply a continuation of this accumulation pattern down here, that this was a normal break and then retest back to, as you can see here depicted in one of the experts that weighed in, Todd Butterfield, Wyckoff on crypto. You see the way he has this laid out is we had the distribution event, the accumulation event, and this is simply post LPS, the jump, and then a backup, and we're breaking out of here again, it looks like. So we also had mode Wyckoff, or Wyckoff mode, weigh in and said that what I had was originally correct, that this is a reaccumulation period as shown on my chart. So again, the Wyckoff experts appear to be a little bit split, so that's no wonder why the rest of us who are not Wyckoff experts are very confused by this price action. So what do I ultimately expect? Again, I expect personally us to consolidate in the 45 to 48K range before breaking out finally out of this upper trend line. And I'll be watching with keen interest to see what kind of structure the market puts in here over this weekend. Namely, exactly trying to see what happens with as it comes into resistance at 48,300. Now we've talked about umbrella. I posted on the original breakout over here on the 12-hour. We had a breakout of this level, a retest, and a resumption. We had a couple of good potential entries here. It's a nice bottoming pattern. So you can see I've got marked here my support between 50 and 54 cents, and then my initial take profit was 72 cents on the trades that we have on here, this weekly resistance. You can see here another project I've been tracking is Elrond. Elrond also broke straight out of its consolidation right into 245 resistance, so we're going to keep a close eye on that to continue to add and build our Elrond position up. All right, well, thank you, everybody. Have a great weekend. If you made it this far, please like and subscribe. Maybe consider sharing the video as well. Appreciate it.